Citadel Global. A very good afternoon to you, Ms. Burtis. Thank you for your time. Now, South Africans have what one would call a love-hate relationship with the rand. It represents our hopes and fears as it rises and it falls. So a very emotive relationship there. Take us through the factors affecting the rand so far this week.
Good afternoon to you and the viewers. You are very right. South Africa tends to look at the rand and actually get a bit more optimistic when we see the rand strengthens, and then we get a bit more depressed when we see the rand weakening against major currencies. Currently, looking at the rand, there's very little local factors affecting the rand. There's very little we can actually do as a nation to currently affect where the rand is trading. And mostly it comes down to what they are doing in the US, how quickly we anticipate interest rates to start rising there, and the amount of stimulus available in the US market.
Now, there has been a larger than expected decline in US oil stocks, pushing oil prices up, while gold lifted after Janet Yellen's comments on interest rates. Take us through the latest market developments.
As we know by now, oil is mostly driven by demand on the ground. To stimulate demand, you need economic activity. Oil prices have been boosted by an increase in that demand, given the fact that the US as well as Europe is well ahead in terms of the vaccination program, and we're actually expecting quite a bit of economic upturn there, and that is assisting the oil price at the moment. We are, however, keeping a close eye on the developments in India, as that might actually put a dampen on how quickly that oil price can rise.
Now, South Africa's main budget deficit for the previous financial year is said to be smaller than government had projected after spending undershot estimates. According to National Treasury, the economy recorded a shortfall of 11.2% of gross domestic product. Now, what does this mean in terms of the health of the economy?
Whenever we start looking at budget deficits from a government perspective, any decrease in that deficit is good news. Basically, that 11.2% is a portion of whatever we manufacture and produce within the borders of South Africa, so expressed as a portion of GDP. And by that decline, and it shows that South Africa actually needs to go on less debt to fund that deficit. So always a good news for South Africans when government is spending less than what we anticipated.
Now, ratings agency Moody's is scheduled to release its review for South Africa on Friday evening after downgrading the country twice last year. Now, the market consensus is for the ratings agency to hold off on a downgrade. Do you anticipate any surprises on that front?
We are not anticipating any surprises. We agree that ratings agencies might actually hold off on another downgrade. However, they will be looking once again at our ability to grow the economy, sustain that economic growth, and obviously, quite importantly, they will be taking a close look at government spending as well as crucial SOEs such as Eskom and the ability to actually power the economy.
Bianca, thank you very much for today's market update. That's Bianca Burtis, the Executive Director at Citadel Global. We continue now with more of the business stories. The government's emergency procurement of renewable energy to supplement